Welcome everyone to Charts Focus 1, where we teach how to work hard and trade smart. In this live stream recap video, I want to go over our SPY put day trade slash scalp that we executed in the live stream. Plus, I want to give you guys a sneak peek into the actual CFO Discord trade room so that you're able to see the progression of how we, number one, initially identified the trade, and number two, how we managed the trade after we entered. So with that, let me go over the exact day trade that we executed using Charts Focus One's expert technical analysis. So what you guys have in front of your screens is the daily time frame chart of SPY, as usual. Now, today started out as a very tame day where we had a very tight price range. And before we started today, the previous day on Tuesday, I cautioned my CFO Swing Watch members that there is a possibility that we could be seeing a lower high being made on the daily time frame. And where is this lower high? Well, it was yesterday's on Tuesday's high. And the high of this candlestick was 385.12. So if this is a lower high, how are we basing it as a lower high, right? What is the foundation of making a claim that this is going to be a second lower high pivot point? Well, right over here. And this is the first pivot high point that we made after the mid-October reversal run to the upside and into midterm elections of the first week of November. So this high here, which was 390.39, is our first pivot high point where we rejected off of that 390 whole number level, or specifically that 389.50 level. And so on Tuesday, we made this 385.12 high, and today we confirmed that second lower high, right? Now, as we rejected from this 385 high, since we did not go all the way up to that previous high today point here from Tuesday, it just told us that, okay, there are sellers forming at this descending level of resistance. And I made this trend line live in the chat room today. And you guys will be able to see my message where I sent to my CFO Swing Watch members of this trend line. Okay, and I advise them to make sure to have it on their charts as well. And then as the day progressed even further, I noticed that we're making this wedge chart pattern. Even before we had that retest of this ascending support trend line that will complete the wedge chart pattern on the daily time frame. So, people always ask me, Andrew, how are you able to see these chart patterns before they're even made, right? Because I understand how the price action should be moving for a specific chart pattern. And how do I even know that? Because I study how chart patterns are formed, and I study the nature of a specific individual name of how the price moves, right? The nature and behavior of that price. And once you're comfortable enough, like SPY here, I am able to determine where the price can potentially go, where specific trend lines can be made, and where I can see a potential breakout point from a potential chart pattern being made. So on SPY, we start to make this daily wedge chart pattern. Now, before I go more into the future analysis on SPY here using this wedge chart pattern, I want to go over the trade that we made before we even realized that we were looking at the wedge chart pattern on the daily time frame. You guys will be able to see this on the CFO Discord trade room when I show you guys the actual Discord. So here is where we saw that trade. All right. So on the 15-minute time frame, as usual, and I gave you guys multiple reasons why I love the 15-minute time frame on multiple live streams on the CFO YouTube channel, right here on YouTube, and on previous live stream recap videos as well. So make sure you guys watch those videos. I always tell you guys why I like the 15-minute time frame. Now, With that being said, this right here was our open. So if we make a little border here for you guys, so that you guys know the price action of today, okay? This is where we opened, and this is where we closed. So I would say the first 2 hours and 30 minutes was very, very tame, right? And we were just consolidating. We were very, very choppy between a range of 378 and 381. And guess what? That 378 level was a level that I mentioned in my previous live stream recap video of UVXY and UUUU, quad U. Right, so if you guys want to take a look at that video, I have the link down below in the description box, or you guys can click on the YouTube channel here, and you guys will see that that's the most recent uploaded video, other than this one, obviously. Um, so this 378 level was a pretty critical level of resistance on Monday. And that's where we saw a lot of consolidation happening after we were able to hold above 377. And that's where we got our nice breakout to the upside as we started to form a nice bullish flag right below 378. So why was I so fixed on this 378 level? Because if we lost this 378 level to sellers, then we would definitely flush. And how did I know this? Well, first of all, today as we're consolidating, we did not get an immediate impulsive reaction to the upside after reacting to and retesting this 378 previous level of resistance, now new support level. And how can I base this, right? How can I base this off from, without any real evidence? Well, there is evidence, right? If you take a look at the previous day here, okay, on Tuesday, there's clear evidence that we had an impulsive bounce at 378 on this candlestick. Okay, I mentioned this in that previous live stream recap video when I go over my UVXY trade. So this 378 price level is definitely an area where buyers are still present. So what is going to happen if we don't see an impulsive bounce above this 378 level? Well, in my head, I said there's definitely going to be a break to the downside, and it's going to give leeway for sellers to come in. And that's exactly what we betted on today when we got into our SPY put contracts. So, with that in mind, as we continue to consolidate, guess what we're doing on the intraday time frame as well? We're making lower highs, right? And as we're making lower highs, I also pointed out to my CFO Swing Watch members that, hey, look, we're making this trend line, this descending resistance trend line, and if this is completed, right, if we start to see consolidation right above the 378 level, we're going to have a micro intraday descending triangle. And guess what? A descending triangle is inherently bearish for all the people who don't know what a descending triangle chart pattern is. And that will mean that the price will most likely break to the downside. And that's exactly what we were betting on, right? We're betting on for the fact that the price will most likely break below 378. So here is the exact trade that I sent in. SPY 370 puts or 365 puts that expire this week on Friday. So weekly expiration contracts once you break below 378. And I got in at around 9:44 a.m. I will just say 9:45 for the simplicity of things here. And it was an early entry, okay, because I wasn't waiting for the actual confirmed breakdown below 378, and that would have been a more ideal entry. However, I decided to be a little bit more risky by getting in at a small bounce here that we got on this candlestick, right? So on this 15-minute candlestick, this indicates 9:45, and this is where I got in, okay? And I was filled. And as you start to bounce away, I noticed that we're seeing a very, very low volume bounce. And also on the 15-minute time frame, my 10 and 21 momentum SMAs, okay, this is my momentum pair here, is what matters most on this intraday time frame. And I noticed that both of them were acting as SMAs of resistance. And that's never a good thing when you're trying to be biased to the upside. And you have more of a probability of the price going in your favor if you're biased to the downside. And so my 10 and 21 estimates give me more confirmation that this descending triangle is going to work out here. Now, obviously, you can't be confident without a stop loss. So what was my stop loss on this specific trade? Well, usually my day trades tend to be a very, very tight stop loss since if you guys don't know, I am a swing trader, right? I don't really focus on day trades unless I have an opportunity like this, right? There's a very, very clear-cut opportunity for me to take a trade. So I decided to give myself a little bit more room for this trade to work. Instead of giving myself a 50-cent stop loss, I decided to have a $1 stop loss. So I got in almost exactly around 378, right? And if I have a $1 stop loss, I put my stop loss at 379.10 cents. And you guys will definitely see that message in the CFO Discord chat room once I show you guys the actual Discord. So with that stop loss in mind, I said, okay, if the price decides to bounce further, right, and we somehow start to break out from this descending level of resistance, and mind you guys, I did not have this trend line drawn yet, and I'll tell you guys why I've drawn this later as I finish with this trade breakdown. I told myself that, okay, if we break to the upside, then we'll definitely retest this intraday level of resistance of 379.25, which will mean I will be out by that time. So I'll give myself a little bit more room here on this day trade, and I'll also be satisfied that I was able to get out at an area that will definitely cause a reversal to the upside, right? So as we start to consolidate even more, and this candlestick formed on 10 o'clock at 10 o'clock here. So right after lunch time was over on Wall Street in the East Coast, we start to flush. All right, and here's my small progression of what happened. Okay, so I was down 5%. On this initial 15-minute candlestick right here where my mouse cursor is, and I kind of stayed around 5 to 7% since entering, right? Down 5 to 7%. And eventually, we started to go down and down. And we were up 15%. And eventually, at 10:32, remember, this is a day trade, right? I'm not looking to hold or swing, right? Swing into the next day. I'm looking to just get out as soon as possible. So at 10:32, I believe I got filled around 10:35. Um, so right over here, okay, I got out around 376.45-ish. Okay, a little bit below 45, but I'll just say 45-ish for simplicity of things. Or if you guys want to just say it in your head, think of it like this, 376.50. Okay, so that is a great risk to reward ratio there, right? I could have kept my 50-cent stop loss there, but I would have been stopped out because on this candlestick right after my entry, okay, I would have to get out around 378.60 or 0.65 because the high of this candlestick was 378.79 if my stop loss was 50 cents. So I'm glad that I had a $1 stop loss at 379.10. Again, you guys will see that exact message that I sent after our entry. So SPY here, as we continue to move lower and lower and lower, I told everyone that, okay, you guys can take out half at 377 or you can hold until we hit 376. And why 376? Because this was a critical level of support on Monday. Remember, guys, when I talked about this Monday price action a few minutes ago? Well, we were making a flag between this 376 to 378 price range. And in between that, we had 377. So this was a critical level of support when this bull flag was being formed. And it is obviously it's obvious to think that I would see some buying coming back in at 376. And guess what? We did. Now, obviously, I left out some room here for me to move to take some profits a little bit lower than 376, but I was satisfied enough to take 30% plus profits on SPY. And remember, guys, I'm a swing trader. I am satisfied with the 10 to 15% return on any type of day trade. That's good enough for me because I don't have the professional skills as a day trader. I have the skills for a swing trader. Okay, so 30% is a huge day trading day for me personally. Now, after this trade was over, I noticed that okay, there is a potential for us to start forming a falling wedge, right? And I basically made the trend line like this. And then after this trend line that I made here, I moved it to this because we continued to go lower and lower and lower. But here's the thing, right? Before we head lower here, headed lower here, I expected the price to kind of stick around 376. Why? Because as we're heading lower here to 376, I told my CFO Stream Watch members this. I want to see a pivot point around 375, right? And why do I want to see a pivot point around 375? Because I knew there will be definitely a little bit of an impulsive peak below the daily ascending support trend line that extends from that daily wedge chart pattern that I've specified in the first few minutes of this video. So what is this saying? Well, this is implying the significance of your daily levels and trend lines. So if you guys aren't focusing on the bigger picture, right, like the daily time frame and the weekly time frame, you will not realize how important those levels are even on the intraday time frames, and they can screw you over on any type of trade if you don't have your bigger picture levels all drawn out and shown on your intraday levels. Okay, and that's the reason why we start to bounce at 375 on this candlestick. Okay, now fortunately, since the market is never always 100% ideal, even if the market gave us such an ideal movement to the downside below 378, we did not get that bounce I wanted to see at power hour, which is the last hour of the market. So obviously, just based on what you guys are seeing on your screen right now, we are below 375 now. So what am I going to expect tomorrow? Okay, so there is still a second trend line that I'm seeing here. Okay, that extends from this 370 pivot point here. And for the fact that we bounced after kind of impulse moving below 374, which is also a previous level of resistance, well, specifically 373.70 to 374. Okay, that was the resistance level. If we're able to defend this tomorrow, right, especially around this area, we should be seeing another revisit of 376 tomorrow as a new level of resistance. And that should also coincide with the convergence point of this ascending support trend line that extends from that wedge daily chart pattern, right? So there's a lot of trend lines to look at, but it gets pretty simple once you know what you're looking at, right? So once you're comfortable with your trend lines and what you're seeing on the chart, it tends to be a lot less complicated, all right? Now, SPY here tomorrow. I'm going to expect a small bounce. I want the price ideally to move. Okay, let me also just remove these drawings first before I go on the daily time frame. Um, Tomorrow I want to see a slight bounce because this is our first time retesting the 21 SMA after moving away from it. And remember, this little tiny micro bounce that we saw in the daily time frame was caused by the hype from midterm elections, right? Right before midterm elections started, right? So the midterms caused this bounce, and after election results were basically not over, we just decided to flush, and the market didn't like that we didn't have you know 100% results from the midterm elections. And now there's obviously different nuances to the catalyst of why SPY fell today. But overall, just price action wise, this is picture perfect. And it makes sense that we rejected the 10 SMA hold today, and we retested the 21 SMA as well. And, you know, this candlestick here is just indicative of the fact, again, that we have made a second lower high pivot point from the first high pivot point from this uptrend that we saw in mid-October. Okay, so we have CPI numbers coming out tomorrow. So I can completely be wrong on the fact that I want to see a bounce, right? Because CPI or inflation numbers can be bad once more, and we can see another flush in the markets. Well, because Federal Reserve Chairman Jerome Powell has told us that they're not ready to cut back on interest rates just yet. All right. So if we do have another high inflation reading, then we'll definitely flush to the downside, and this wedge chart pattern will be a breakout to the downside. And I also want to come back to that wedge chart pattern because if you guys didn't know, a wedge chart pattern provides two different opportunities. One entry to the long side or one entry to the downside. And that is the beauty of a wedge chart pattern because you're able to expect to play a breakout to either side, one to the upside and one to the downside. So if I want to see an ideal price action tomorrow, I want to see a bounce so that we can come back into this wedge chart pattern and consolidate even longer, right? So that for the next, I would say 2 to 3 or 2 to 4 trading days, I want us to bounce. And as we're bouncing, okay, start respecting this descending level of resistance once more. And as we're getting very, very close to this converging point, right, between these two trend lines, one is the descending level of resistance and one is an ascending level of support, we can see a potential breakout to the upside, okay, or one to the downside, okay. So that is your analysis for SPY for the rest of this week. Okay, so with that completely in mind, now I want to show you guys the actual CFO Discord trade room and give you guys a slow rundown on the progression of this trade. And as I'm doing that, I'll just stay silent for you guys so you guys can read everything as I'm scrolling for you. So here we go, right? So here is the trade room, right? And here we go. All right, so that is it. Okay. Uh, I hope you guys enjoyed this breakdown and a little bit of a sneak peek in the actual CFO trade room, and you're able to see the actual progression of how this trade went. Okay, so if you guys like the information that I provided to you in this video, make sure you guys leave a like down below. And if you guys are new, welcome. And make sure you guys hit that subscribe button as well after you hit that like button. And if you guys want to join the CFO Spring and Watch newsletter, which will give you access to the private CFO Discord as you see here, make sure you guys check out the description box below where I have the link to the CFO Swing Watch newsletter subscription page. Okay, and I also give you guys 2 discount codes. So check out the description box below before you go on to another video. All right, I'll see you guys all on another video. Have a great night and thank you all for listening.